What up, Jolyn?
Natalie. I'm good. How you doing?
Better. You know, I feel like it's time that we kind of like just unshave off some of these layers. You know, because I think that tonight is going to be a little interesting. So, wave check. Not there yet, but we're going to get there. All right. What's up, everybody? I'm Mark Monroe. I'm accompanied by my wonderful co-host, co-producer, co-creator, Galactic Catalyst, who's come down here to Earth to just grace her with her awesomeness and leisure. The wonderful
Julian GC, the place to be. What's up?
How are you today?
I'm pretty good. You know, it feels like a Friday. It's not, but it feels like a Friday. You know, I've been baking pies.
Yeah?
There was someone, Matt Reese text me. Text me for your slice. But you know, because I told you I went apple picking, and so me and my sister were making pies. So, and I just have to say, let me toot my own horn. Okay, I've not baked a pie since I baked them with my grandma like a long time ago, I think. And
yeah,
these pies are fire. Regular and gluten free. Okay, I'm out here.
Okay, in hella traffic, or are we just like in the fast lane?
No, I'm in hella traffic.
Okay. Okay. Well, y'all, welcome to the Come Up series, the show in which that every Tuesday and Thursday, it is our goal to make sure that you witness the come up. And tonight is like any other night, like pretty much it's going to be a come up. So strap in, get your pen and pad or your iPads, whatever it is, and also make sure you stay hydrated because I clearly am going to need to. So we're going to get into it. If you haven't subscribed yet, go ahead and hit the subscribe button down below. If you like the video and love our content, go ahead and hit that like button. We'll be totally grateful. And on top of that, if you want to be in the know, just like how Reggie was when he was the first one to the video. So shout outs to you, Reggie. Go ahead and hit that bell so you can be a part of the notification squad, aka the Cool Kids Club. So Jolyn, without further ado, how do we do in today's markets?
Oh, I wish there was a phrase for this day, but there's not. So it's Thursday, and this is how we did in the market, y'all. We got the Dow coming in at negative 50.63 points. S&P 500 was negative 3.54 points, and the NASDAQ was positive 32.49 points, and the VIX still in the 24 range at 24.36. 10-year Treasury note coming up a little bit to 1.435%. Heading over to sector performance. As you know, there are 11 sectors. We track the top 3 and the bottom 3 so we can see what that rotation is looking like. We got energy, financials, and industrials holding it down for the top 3. For the bottom 3 is consumer staples, utilities, and real estate. And I'll just note that utilities and real estate were both in the red today. Then for our pick performance, you can find the Come Up Series picks at that Come Up Series on Instagram. We have ticker symbol EAT, TBT, and JPM holding it down for the top 3. And the bottom 3, which we haven't seen these guys down here in a minute, it's Datadog, DraftKings, and Robinhood. So those were the top and bottom 3s for our stock picks, Mark. And Mark,
okay.
No, I just wanted to, use this day to play a game. We haven't played a game all season yet.
Okay. Yeah, I'm here for it. You know, I can definitely have a change of scenery and a change of vibe. So, but first, before we get going, I definitely want to send a special shout out to each and every single one of you. Thank you. Tuesday was one of the hardest episodes for me because especially having lost somebody just a few hours before I went live and then, saying, hey, do I go live or do I not with Jolyn? And, honestly, just knowing who my aunt is, she was like, yo, the show must go on. So definitely kind of have to slightly go back and see all the things that I talked about because, you know, hopefully it was something that was uplifting to y'all and everything else. I think after I finish the part of the spreadsheet, which we will get out to you guys as soon as we can, making a few little tweaks here and there just to make sure we spruce it up for you. But it will go out, and so that way you can, you know, play around with it and also make some adjustments to the numbers that better suit your money plan. So be on the lookout for that. But I just want to send a special thank you to each and every single one of you for just the condolences, the prayers, just the good words, the blessings and everything else. I know that, you know, my aunt is definitely looking down at me and saying, you know what, nephew, all right, enough with it, get on with the show, so let's go. So, Jolynn, let's do it.
All right, so y'all, we haven't played a game all season, so we're gonna play a game today. Mark, I hope you're ready. Well, you probably are. We're gonna play a game today.
I just turned my swag on, so I'm ready. Okay.
It's called Bears and Cats. All right, so we're gonna look at the pick list. At random, I'm going to select a ticker symbol, and I would like for you to give the bear case. And then for the cat part of it, the cat is short for catalyst. And then one major catalyst that might aid in the bull case, but not, I don't want you to go over the bull case. Today we're doing bears and cats, okay?
Okay.
And just to keep you on your toes, there will be a time limit. You have 60 seconds or less to give the bear case.
Okay.
And then also, to further keep you on your toes, I may throw in a question from one of the come up cousins that has absolutely positively nothing to do with your train of thought on the bear. So are you ready?
I guess I have no other choice. I'm live, so let's go.
All right, let me just make my list here.
Is it my goal to get through all of the pick lists?
Yeah, because there's only a minute for each.
Okay. All right.
All right, let me get this timer ready.
And I have to give the catalyst to everything, or I just have to give the bear case?
No, only the bear. Okay. Everyone else can. It's so easy to find bull cases for stuff. So we're just gonna do the bear.
Okay.
All righty. Up first. Are you ready? All right, ticker symbol. GOOGL. Go.
GOOGL. Google. Okay. So we're really keeping it tough for me. So Google. Bear case for them is that ad revenue starts to slow down. A lot of the catalysts of what they said that they would be able to deliver on, especially on their hardware department, doesn't really pan out. So we see ad spend drops or goes to a different platform. That significantly hurts Google. Also the fact that their devices just don't pan out against, say, for example, Apple devices or other cell phone makers. And then on top of that, their App Store or their Google Play Store, they're taking a significant cut as it pertains to revenue from, say, for example, developers, which gaming happens to be a vast portion of that revenue. Let's see here. Also, monopolistic practices as well as any potential hits from SEC or DOJ can definitely spook. There you have it.
All right. All right, not bad, Mark, not bad. All right. Up next, ticker symbol MKL. Go.
Merkel Insurance Company. What can definitely hurt them is, of course, somebody going with with a different insurance provider. Also, there's a huge amount of growing interest that's going into Merkel because of the fact that Tesla is one of the players that's looking to use them as one of their underwriters. Well, if that doesn't come out and essentially investors have been invested for so long, then that can definitely turn into a bear case. Also, the fact that as we start to see things like deflation come through, then that can also hit places such as insurance, especially since those premiums can be a little bit higher, which nobody likes to pay high price premiums. One of the biggest catalysts to it is also in the sense of we're starting to see other forms of insurance that are coming out that are giving consumers better options as well as on the enterprise and business side. So that's huge. And then on top of that, if we see many significant natural disasters due to climate change, then that raises the cost as it pertains to them having to front the bill. So that can definitely
Time. All right. Debt ceiling raised till December 3rd. What impact could we see come December?
What can we see calm December?
Come December, by December, what can we see?
Essentially, debt ceiling just ultimately allows for the United States to get its affairs in order, so that way, essentially, we can actually get a decent budget, and on top of that, being able to cover the bills. I don't think that that's really going to play a huge issue per se, because if you go back and look at the history, we see consistent debt ceilings that are consistently raised, or just removing the cap off of for the debt for it to be paid, so that way you can avoid a government shutdown. So I think that as we go into December, I think we're at pretty much the end of the year right now for federal. So we're going to pretty soon start a new fiscal year anyway. I think this is just more so for the United States to cover its big bills that it's got to pay.
All right. You did good. All right. Up next, we're going to go with Tesla. Go.
Tesla doesn't deliver on its numbers for delivery, which produces a huge bear case because they've already came in a little bit light at 50% projection. Another thing is chip supply shortage definitely starts to hit home, though that they're manufacturing their own, but if they don't have enough materials, then that can definitely slow down things. Definitely being hit by, say, for example, the Department of Justice, or say, for example, NTSB, for, say, for example, more car accidents. Full self-driving still starts to stall, and of course, for example, other players in the space start to catch up. That's always a huge thing, because that's a lot of Tesla's price is priced in as it pertains to them being ahead of the curve. And then on top of that, cost margins. If cost margins start to increase, but yet at the same token they can't account for that, that can hurt Tesla significantly.
Oh, okay. Seconds to spare. All right. So how about the cat for Google?
Catalyst for Google as it pertains to bear case, or because I think I gave that. Am I giving it for bull case or?
For bull.
Okay, so catalyst for bull case is Google literally improving its ad dollars as we start to see travel and leisure start to climb back, and especially hotel and travel. Then that's going to be huge, because they are sometimes, I think they are actually the biggest ad spend. Those are the types of things. I think that also as we start to see more of the space of commercial rental spaces and everything else, I think that that also helps Google, because of course ad dollars, people are sitting more so at their machines. I would say also their hardware. If their hardware is a hit, working at least keep up on both the Internet of Things thing as well as cell phones, then that gives Google a huge shot, along with Waymo literally starting to take shape, form, and fashion, including some of its other Google X project investments as well.
Okay, you're getting good at keeping it below a minute there. All right. Very good. Very good. Okay, quick question coming in from one of the cousins.
Okay.
The Fed basically said we'll start to taper next meeting. Which sectors will get hit/benefit?
It's definitely going to be probably the things in which that have had glorious runs: financials, materials, industrials, and some of the utility stuff. I think that those are going to be areas in which that we look at. I think that we can definitely see that, anywhere that's been hit hardest, you see a little bit of, quote unquote, some fears there. But in the grand scheme of things, I think that it's going to be very much so short-lived anyways.
All right, so we're going to switch it up for a bit. So the question is, what is the catalyst for restoration hardware?
On the bull side?
Yes.
Catalyst for restoration hardware on the bull side is, of course, consistently seeing, well, one of the things is that we've seen prices go up. So, of course, that's a huge thing. As you see inflation for materials go up, then that raises the cost of, say, for example, things to be sold. And then, of course, restoration hardware has already built in strong profit margins anyways. Another bull case that's a huge catalyst is the fact for restoration hardware and its manufacturing plant. So if we see that Vietnam is able to keep up and start to revamp its supply chain and manufacturing, and that's huge for companies like Restoration Hardware.
Excellent. Okay, now Bear for Restoration Hardware.
Inflation comes down, meaning that the cost of materials goes down. Then from there, you can't really justify the price on the retail side. So therefore, that's huge. And then on top of that, if we're not seeing any commercial leasing that's really taking place, or anybody wanting to buy that, especially when we go into a deflationary period, or when we start to see that, say for example, just the liquidity just isn't there on a retail side, then that can definitely hurt Restoration Hardware for sure.
Dang, okay, all right. Now,
don't give me time, I catch up.
Okay. Now, contain the catalyst on the bullish side, and the bear case in 60 seconds for Adobe.
Catalyst for Adobe is seeing that we get more into live sports, live events. That's definitely helping Adobe on its digital sales platform, especially through Magento, which a lot of folks don't talk about. Also, the consistent spend and getting more so things like activated for Hollywood and other entertainment pieces. Good for Adobe on bull cases, along with its Creative Cloud platform. Bear cases is that essentially if we ever have any lockdowns, or if we start seeing that other platforms arise where essentially that can challenge Adobe. One of the main things is DocuSign. If DocuSign keeps growing, then that literally knocks out Adobe Sign, especially since they've been spending an exorbitant amount of dollars towards marketing. But yet, if those marketing dollars don't equate to actual signing or paying users, then that can definitely hurt Adobe's bottom line for sure, which can ultimately impact the stock because of the fact that their projections are going to come in a little bit weak.
Boom, 3 seconds to spare. Okay, next question here. Thoughts on TSM's upcoming earnings report? Will it break out this quarter from a technical analysis standpoint?
I think that it's still going to stay a little bit weathered, but it definitely has an opportunity in the stock for it to break out, as long as essentially that the guidance either comes in line or beats ahead of what we had last quarter. So if we start seeing that there's any light at the end of the tunnel in this chip supply shortage, which I don't think that that's going to happen, but the fact that they have consistent customers, along with now the word of Intel, and if they confirm that Intel is actually one of the customers to their space, then that's going to be huge for TSM.
Alrighty. Bear case for Lam Research. Only the bear, no catalyst, just bear.
Bear case for Lam Research is that the price of the stock is a little too high. It's very valuation rich, which means that it's completely overvalued. I would say it's probably overvalued by at least probably 15 to 20%. I think that it's reaped the benefits of inflation for inflationary prices due to the fact that we've seen a spike in cost for chips as well as anything that's in that space. I think that ultimately that it's had a great run, but I think that it's time for folks to start taking profits, which can ultimately lead the stock downward. It still hasn't been able to get out of its own way and go back up to those highs in which that it was at prior. But essentially, yeah, I think that the stock itself is a little bit overvalued. It's valuation rich right now.
Okay. We're gonna take it over to some questions from the cousins. Here's a question. What does it mean when CNBC says that a stock is trading at a multiple?
So when a stock trades at a multiple, that means that essentially that you're talking about a PE ratio, profit to earnings ratio. And so normally it's like a good rule of thumb is anywhere in the teens to like about 29 is considered okay. But when a stock gets to a point of like 33, then we say at a multiple times earnings. So essentially you take that PE ratio and you multiply that over a course span of, say, for example, quarters, in which that over that period of time, you say, okay, hey, it would take X amount times earnings in order for it to meet that valuation. So for example, if it's 33 times earnings, 33 quarters would essentially place you at such a valuation in which that it would be that it would equate to.
Okay, what is your S&P price target for 2022 year end?
Year end, I haven't really given this out yet, but I would say that my price target for S&P 500 is probably anywhere between a range of the bear case, I would give you about 4,300. Base case, I would give you probably about 5,000. And then on a bull case, I would probably give you a price target for the S&P 500 at about 53, 5,400 by year end, or at the top, or at peak.
Bear case with a catalyst in 60 seconds for Intuit.
Intuit software, pretty much they've been spending a lot. They also have significant amount of competition that's stepping into a space that a lot of folks are questioning whether or not they can believe in it. I mean, Quicken has been around for quite some time, and along with QuickBooks, but there's tons of other competitors that are within the space that are not even public that are doing the same thing that Intuit can do. And on top of that, essentially at a cheaper price point, that ultimately it's like Intuit's been insulated for quite some time, but yet at the same token, I don't think that it can sustain at those levels, and ultimately it will definitely have to go for a setback.
Okay. With Samsung winning the bid for HW4 from Tesla, how will this impact TSM?
I don't think that it will have a significant impact because of the fact that Tesla only makes up X amount of a small portion of TSM's revenue. And I'm probably sure that at the moment that Tesla drops from TSM, there will definitely be another player that definitely wants to step into the space and take up Tesla's percentage that once sat there. TSM is not hurting for clients, and nor will they over the next few years at all.
Okay, so there's a question about Tuesday's rolling forward spreadsheet. So the question is, can you please break down the dividend portion of the spreadsheet that you showed on Tuesday?
Yeah, so the breakdown of it is that after you get to the point of the rolling forwards, you take 75% of your cash, put it towards an MLP DX or a monthly dividend position. The MLP DX gives you anywhere from a 16 to 20% annual dividend. So for example, if you had, let's say, I'm going to just spitball here. If you had, let's say, if you had $1 million, let's just say if you had $1 million, and then essentially you take 16% of that, then divide that number by, say, for example, 12, because you paid out over a monthly basis. That would put you at $13,000 on a monthly basis. So it literally, the whole point of it is so that way you've just created an annual salary for yourself that's paying you on a passive income base that you could choose to either pay your bills with or even put that money back into the market and reinvest it.
All right. Bear case for MasterCard.
Bear case for MasterCard, I mean, of course, you got to look at its noisy neighbor across the pond, which is Visa. And then on top of that, some of the other fintech companies that are definitely coming in and starting to step into the space. Let's not forget about crypto wallets. So the biggest thing is MasterCard, and just like its counterpart Visa, are not really judged based upon a multitude of things. They're really judged based upon transactions and transaction volume and the price of that transaction volume. If people start going more so into a debanking period, and where they don't go into using debit cards but more so using digital transfer, then that can definitely hurt companies like MasterCard and Visa specifically, which would definitely give a bear case towards MasterCard, because then you have no need to use, say for example, debit cards and those types of things. You truly go into what is called digital payments, and what you see in places like Asia, where there's no need to really use a platform like MasterCard or Visa, because you can just send the money directly through crypto wallets. So crypto wallets can definitely put a hindrance towards MasterCard.
And you got the full sentence out. All right. Okay, up next. Ticker symbol. I haven't been doing the ticker symbol, so ticker symbol. Are you ready?
Yeah.
TWLO.
TWLO.
Bear.
Bear case for TWLO is that the fact that it could be a little bit overvalued. Valuation has gotten a little bit stretched. Also in the sense that customer service can also take a hit as we move outside of pandemics, as well as, say for example, platforms going into the space of customer service, where they start to create their own digital, and there's already a few that are there. Now, if they, say for example, go through acquisition, that could also be bear, because they're having to spend more. And then you really question, okay, hey, is the valuation really worth it? So I think the biggest bear case for Twilio right now is this valuation. Can it actually prove that it can actually bring forth that type of revenue on a consistent year-over-year base, quarter-over-quarter base, and essentially have those valuations justified? Sooner or later, we will find out.
Okay. Good soundbite. With the 5.5% pullback lasting 11 days, do we see a pullback in October that is steeper?
I don't know about that one because I think a lot of folks look at last October and say, okay, hey, well, we saw a steep drop there. But keep in mind, that was also due to an election that was taking place. So elections tend to draw a little bit of volatility and can cause a little bit of nervousness in the market. We don't have that this year. So I think the biggest thing is we'll probably see some of those same trends that take place, but I would definitely be on the lookout and watching December, because holiday sales and what we know about the consumer, if consumers don't spend as much as is expected, then that can definitely cause some issues and possibly spook the market into, hey, I don't know if a lot of these companies, their valuations are believable at this point in time. Maybe we're going to go back and settle back. And if that's the case, we could probably see a sell-off in December going into the beginning of January.
Hold up. Hold up. Okay, I'll let that one slide. All right. No, it's something else. Okay, are you ready? Ticker symbol HD, bear, go.
Home Depot has had a wonderful, phenomenal year thanks to inflation, price of wood, cost of materials, and construction. Construction costs have gone up, so which ultimately is driving up home values. When we get to a place where we get into a deflationary period where the materials get deflated, so their costs aren't as high, and on top of that, when we start thinking about, like, for example, home builder costs starts to drop, then we'll start to see those same type of values drop within Home Depot. On top of that, we saw a massive amount of folks that were literally buying at Home Depot because they had nowhere else to go, so why not improve on their home values? But you can only do so much there on home improvement projects. So it wouldn't be surprising if we see companies like Home Depot literally take a dip and ultimately get rebalanced.
Okay, 9 seconds to spare. FTNT, bear.
Bear case is the fact that if spending starts to slow down, or the fact that essentially that if FTNT's platform starts to show more cracks in its armor, and also other platforms that are also within the space start to show that they can do better and scale faster. I think that that's definitely a challenge for FTNT alongside with its rich valuation, but the biggest thing is more so its competition over its valuation. We already know that there's going to be significant spending in cybersecurity, but the question is FTNT going to take a majority of that pie, or what about companies like Zscaler or some of those other companies? What will they do? Can they actually come forth and actually give FTNT or Fortinet a run for its money?
Alrighty.
By the way, as valuations get rich, we can add this to my 10 seconds. As valuations get rich, people start to look for bargains elsewhere.
Okay. Here's a question. What to do if your call is deep in the money and there are no buyers?
If your call is deep in the money and there's no buyers, well, you should have known that before you even got into the position. That's the first thing. Second thing, if you're profitable within the position, I mean, does it really matter? You're selling it off to a market maker, so it's not like you're going to sell it directly over to somebody else who's going to essentially buy it off of you. It doesn't work like that. It's going to go to a market maker, and then they will make their cut. They make their cut from you, and then they make their cut from the person that's also looking to buy.
Okay. Let me see. Sorry, I got distracted by Steve's question that makes his comment rather. Okay, so Catalyst on the bull side for ticker symbol ACN.
Catalyst on the bull side?
Mm-hmm.
Essentially, that we start to see that more consulting services start to increase. That's where Accenture will really start to shine. I mean, they have a ton of consultants that work throughout multiple companies, throughout the Fortune 500, as well as within growth and scaling startups. So that's huge. I think that also their research arena in which that Accenture does is definitely many times underlooked, that a lot of folks don't realize that enterprise companies are willing to pay for that research. So something to look at there. I would say also a huge catalyst is more so in the sense of them strengthening their security and showing the market that essentially that they've learned, and that the fact that there's still growth there. I think that that's huge for Accenture.
Bear for ticker symbol SE.
Ooh, C Limited. So one of the biggest bear cases for most of your Chinese stocks is definitely going to be one. And of course, we're not really looking at the Evergrande situation, but more so in the sense of China cracking down on gaming and saying that, okay, hey, well, we would like for folks to actually stop gaming. We would want them to game less. And of course, when you think about gaming platforms, it's all about hours spent, dollars spent on the platform. If you have such a country that ultimately starts to limit that, then that can really put a damper, especially when you have the second largest economy in the world, and especially where gaming comes out of. So that can really hurt, say for example, C Limited significantly in moving forward. All in a nutshell, politics, or Chinese politics, or domestic politics, since they're back home in China.
Okay, you got that within the time. Roku, Bear, plus a catalyst within 60 seconds.
Okay, so Roku, given that the fact that they've been dropped by TCL, so which means that they no longer are going to be carried within TCL products, that's huge. And then on top of that, the beef that they had with Google with Android TV. The question is that what more is it that Roku can technically provide users or their consumer base outside of just selling devices? Do they become back to becoming a device company, or are they going to go through and challenge and create something else that ultimately marries the two between streaming services of content as well as gaming? We don't know. But those are things in which that ultimately are huge challenges because of the fact that we don't have an answer yet. We've seen that Netflix has now started to graduate, and can Roku step into that space? People are really questioning that. We still don't have an understanding of why is it that they acquired a platform like Quibi. And on top of that, it's like the question is that there's other dominant players in the space. So their valuation isn't really justified at this point in time unless they can actually come out with one more big thing.
Got that sentence in. Okay, Microsoft, and we're gonna go with the Bear for Microsoft and one catalyst, 60 seconds.
Okay, so Microsoft, though a great company, at the same token, I mean, it's stood the test of time, but at the same token, it has a habit of getting a little bit stale. There are cloud services that competes against AWS and Google, great, but yet at the same token, I think that a lot of those revenues are starting to be priced in, though that they're using artificial intelligence and machine learning to learn from consumers and start to develop more applications or services through their cloud. Great. The problem is they don't really do a very good job of pricing some of their things, like for example, the pricing structure for Microsoft Azure alongside with how they price their devices. I think that as we go into a deflationary period, I think that a lot of their pricing for a lot of their products are going to be way too expensive, which is going to give a lot of their competition some advantage. And that's always been one of Microsoft's biggest issues. They don't price things very well. And so then therein you give opportunities for companies like Apple, Google, and many other players within the space.
Okay. Bear and Catalyst for ticker symbol ZS in 60 seconds. Go.
Zscaler's valuation is ridiculously high, though that their revenues are not even anywhere near close, though that we are seeing growth and it's a consistent growth. But the question is that if you look at its valuation, it's really rich. Also, the fact that they still have not been able to take the reins and really disrupt the old guard that has been there for quite some time, which is also known as Fortinet. That's huge because of the fact that normally when you become a publicly traded company, you've disrupted X amount of the market in today's world, and they haven't done that. they're still playing, if not second or third fiddle, or even fourth. Because I can name a few companies, CrowdStrike, Palo Alto Networks, that could sit essentially ahead of it. I think that one of the biggest things is to look at cash. Is the cash there to justify actually at the valuation? No. So now I'm scratching and clawing for areas in which that I can truly say, hey, well, what is it there for me that literally justifies me paying at this price premium?
Okay. All right, the question is, it's go time on Visa, right?
It's what?
If we could, it's go time on Visa, right? That's the question. But I want to take a look. Can you pull Visa up?
Okay.
And take a look at Visa, because remember we were talking about Visa and looking for confirmation towards the upside. And at that time, it was about 225, then it dropped to 224, and now it's over 228, I believe.
Yes. Okay, so looking at Visa, do I still have 60 seconds here?
Oh no, you just...
Okay, so looking at Visa, I think that we've definitely found our footing here. We definitely found confirmation. Another thing that you can look at is we're starting to march up where the 5-day EMA is it's crossed over the 200-day moving average, so that's definitely a good sign. We still have the 50-day and the 21-day sitting well above the 200-day, so that's also good. We've crossed over the 21-day and we're starting to show bullish signs there. The next thing that we're looking for is that this 50-day EMA will start to turn at the same time that we start to see that the 5-day crosses over the 21 EMA. I'll hollow this out for everybody to actually understand what I'm saying. So if you see this here, we've come all the way down, and now
Here.
it's like, huh?
What's this here?
Oh, we see the 200-day moving average, and we see that the 5-day EMA has crossed over it, and as you see, we're sitting well above the 21-day EMA, and you're starting to see the 21 EMA go towards the positive, which means that when I mean by going towards the positive, I mean that essentially we're starting to break the bearish sign and go up to the upside. Again, for anybody that was listening to what I said, of course, take it with a huge grain of salt, but you have it now that the 50 days at a 230. Originally we were at a 234, so we actually needed to come down a little bit. Now that we've stabilized, it's only a matter of time until we start to see Visa touch 230, and once it really starts to do that, you're going to start seeing those stair steps back up to its upside moving forward. The only thing that can technically break that is if we see transaction volume and flow start to slow down when we listen to their earnings. So I would be really interested to see, did we see consumer spending still at the top?
And what is the bear case in 60 seconds for Visa?
Where we start to see consumer spending starts to get weak. If consumer spending goes weak, then that impacts companies like Visa and MasterCard significantly, along with companies like Square. So essentially they're judged based upon their transactions, especially Visa and MasterCard. So if transaction flow is low, then that lets you know that consumers weren't spending as much. They were holding on to cash or just letting the money just sit there in their accounts, or finding other places to put it, like for example within cryptocurrency. You don't need to actually use a debit card in order to transfer over to those areas. So that's something to definitely be on the lookout for. Consumer spending is going to be the huge catalyst in looking forth to say that, okay, hey, Visa is actually here to stay. If we don't see that, and if we also see that also borrowing, or say for example, the amount of credit spending is up, that's a huge catalyst to the upside for Visa. But then at the same token, if consumer spending is low, then that can either turn us flat or, say for example, take us down to the downside, especially as we go into holiday season.
Boom. 1 second. Smooth. Very smooth. Okay. Bear and Catalyst for DocuSign, 60 seconds.
DocuSign's valuation is still a little rich. On top of that, they definitely have the smoke coming from Adobe, because as I've stated earlier, Adobe is definitely looking to make significant spend in marketing and trying to attract more folks on their Adobe Sign platform, which loops you into the Creative Cloud. I think that also DocuSign is starting to get to a point where, okay, hey, I think that they've captured X amount of market share, where we talk about total addressable market or service addressable market. Now the question is, can they go through this S-curve period and find a new catalyst to literally recreate the business and do something else in moving forward? If they cannot, or if we start to see that there's a slowdown within these spaces of what has been their bread and butter for marketplace, whether it's for government or even real estate or those types of things, that can be an issue for DocuSign significantly.
Dang, smooth criminal, right on it. Okay, Mark, I see you out here. Let's do Square, Bear, and Cat within 60 seconds.
So shout out to Zay, because I know that this is one of your favorite stocks. But bear case for Square, I'm gonna just say it, Stripe. I think the biggest thing is when Stripe hits the publicly traded market, Square may be possibly in trouble. They're doing a significant amount of spend, and they're definitely accounting towards a lot of their cryptocurrency wallet space, along with what they're doing within stock, but I don't really feel like that's strong. I think that ultimately where they need to be, where a lot of investors are just really sitting and holding, and they're waiting to see if their restaurant market and also if their banking side for small businesses along with lending really starts to pick up. If those things do not pick up as much as it's been projected, then that can definitely spell trouble for Square, alongside with you having Stripe right around the corner getting ready to hit IPO season. But outside of that, I mean, there's not very much strong catalyst that, if not, I'm reaching.
All right.
Especially for them acquiring title, which,
I'm going to give you that little extra. Okay, ticker symbol CAT.
Caterpillar. So bear case for Caterpillar is the fact that ultimately we start to see spending come down for within that space. On top of that, essentially people just don't want to pay the prices for Caterpillar. I think that ultimately what made Caterpillar also pretty attractive was the fact of inflationary costs. So with the cost of everything going up, and especially with supply chain and logistics being in a shortage, when you normally go through these periods of time, you see the prices of things go up, which can also help improve margins. But when they come down and they haven't really improved on anything else, which Caterpillar ties everybody in with their software platform that's tied to the hardware. But yet at the same token, we're starting to find that people can tweak that, and there's also third-party markets where they're able to literally, rewrite the software. That can also hurt Caterpillar because then it creates a secondary market, which is revenue that they can't really capitalize on. And on top of that, as we start to see things deflate in inflation, that also hurts Caterpillar. Ah.
All right. Ticker symbol CACI. 60 seconds, bear, 1 cat.
The biggest bear case is the fact that, and I can do this very easily, the biggest bear case is that there's not a lot of investors that really know about the stock, so ultimately it just sits there. That's if you have a market that doesn't really know about CACI and what it's that they can do, and alongside with the economics that just don't currently support it, then that's what literally leaves it in bear case. Economics is one of the interesting things that can leave a company in bear market territory, which says that the market just isn't ready for it, or that the market just doesn't believe in the thesis yet.
All right.
But outside of that, valuation's good and everything else, it's just ripe for the picking.
All right, you had some time left on that, so we'll let that slide. So Mark, today I received a video from our young investors. This one was it wasn't Johan, it was Johan's youngest sister.
Okay.
Lou, and Lou told her mom to sell all of Target and put it into Roblox. And she asked her twice, and Lou responded, yes, sell Target so she can get into Roblox. So bear case for TGT.
Bear case for TGT is consumer spending. Again, I know that I'm sounding like a broken record, but consumer spending slows, and that hurts retail significantly. As we start to see other things like, for example, things like interest rates start to climb, that can also hit and hurt debt. Lay down. The biggest thing also is that its valuations have gotten significantly stretched, and the question is its valuation still believable going into 2022? We don't know. Will the spending be the exact same? Keep in mind you have inflation, so which drives up prices, and then on top of that we also have, say for example, a consumer that may be a little bit spooked And on top of that, they're not getting the type of stimulus. So quantitative easing, as that slows down, that can hurt, say, for example, companies like Target because they're not a growth stock.
Ooh, 5 seconds to spare. All right, NVIDIA, bear plus 1 cat.
ARM deal falls apart is a huge catalyst, though that, I mean, it's you know, whatever. I think another one is the fact that as we start to see that chip supply shortage starts to subside, the question is that essentially, again, can NVIDIA maintain that valuation? I think that there's a huge price target for NVIDIA to reach 1,000 for sure, and possibly even going beyond that. The question is essentially, can its NVIDIA Drive platform, which we haven't really heard very much about, though that essentially that's indicative of, say, for example, the automotive market. So the automotive market can stall out NVIDIA alongside with, say, for example, the data center part. Since there's been a heavy amount of spend, are people still going to be spending that in 2022 and 2023? That's going to be the biggest question as it pertains to NVIDIA. And we're not talking about on a retail side, we're talking about on an enterprise side, alongside with its artificial intelligence in which that they use to the cloud. There's so many other providers, so it's now a little bit oversaturated. That could hurt NVIDIA. Unless they finally...
Time.
I guess you'll never know what I was going to say.
Symbol, ADP. Bear, cat, 60 seconds, go.
Bear case for ADP is the fact that employment numbers are still crap. I mean, as long as we see unemployment numbers still in terrible, and the fact that we're seeing wage growth doing somewhat well, but it could be better, then that definitely hurts a company like ADP because they're pretty much used for a lot of the processing of data, so they're pretty much indicative to the economics. But as we see the economics improve, then that also gives a bull case thesis for the catalyst. But until then, it's still bearish for ADP because of the fact that we don't see the payrolls there, we don't see the employment there.
All right. So in the interest of time, we're moving into the 30-second lightning round. For the upcoming ticker symbols, these will all be bears. Bear
Shocker.
case with an occasional cat. You never know. I'm not going to say which ones are which.
Okay.
It's all done at random.
Okay.
And you have 30 seconds for ticker symbol. Hold on, let me add this up here. This little 30 seconds we got here. All right, timer is ready. You have 30 seconds for ticker symbol ups.
Wow, UPS. One of the biggest things that is a bear case for UPS is the fact that there's so much competition from FedEx, and on top of that, Amazon, now that they're based out of, they have a base in Kentucky that sits right there, and they've been acquiring airlines or airplanes significantly throughout the pandemic and even before then. So they've been increasing their spending. That can also spell trouble for, say, for example, UPS, because now that puts Amazon. How is that 30 seconds? You took up 10 of my seconds.
No, I didn't. I didn't press the timer until you were talking.
Okay.
I promise. All right, up next.
I really wanted to say that
30 seconds. 30 seconds. On ticker symbol DIS. Go.
Disney, the bear signal for them is the fact that nobody wants to pay $30 on top of the monthly services that they pay for. And on top of that, essentially, we can start seeing that their streaming service numbers can decrease. And on top of that, their CEO on, say, for example, understanding the importance of the Delta variant, which can impact their locations as it pertains to the actual theme parks. That will hurt sales.
30 seconds. JP Morgan, go.
Bear case for JP Morgan is the fact that as we start to see inflation increase, then that's good. But then the question is a lot of that stuff already baked in as it pertains to price? And what happens when we go to a deflationary period? That can definitely hurt bank stocks significantly. So that's the bear case for JP Morgan and Goldman Sachs.
Dang, okay. You had some time left. Okay, 30 seconds. Bear, cat, ticker symbol NKE. Go.
Ticker what?
We'll restart. Ticker symbol NKE. Go.
Wow, why am I drawing a blank? Nike. So Nike, I mean, of course, the biggest thing is direct to consumer. I mean, given that you're dealing with supply chain shortages across the board, I mean, that hurts Nike significantly, especially on the manufacturing point, especially like given in the sense that you can only produce X amount. If you can't produce the type of volume in which that you are, then that means that your revenues come in a little bit light, which can hurt valuation. Also, the fact that you have other players like Lululemon, Athleta.
Time. Ticker symbol DDOG. 30 seconds on Bear. Go.
Datadog, definitely valuations are a bit stretched. Also, in the sense that spending can significantly drop because of the fact that we saw so much of the spending taking place in 2020. So we'll see some of that spending kind of like subside just a little bit, especially as we see people go back to offices, but not significantly, but the valuations are just a little bit rich.
All right, you had some time left. All right. Bear, cat, ticker symbol AAPL. Go.
Bear case for Apple is the fact that it's a lack. Their investors want more innovation, which they feel like they're not getting from Apple. The iterations part is pretty dope, but then at the same token, it's like it's not good enough, especially since we're getting ready to see a huge innovation boom come through over the next few years. And the people are asking, is Apple really ready? We hear a lot of rumors, but we haven't heard any news. And that can definitely hurt Apple because of the fact that people start to get a little antsy. Valuation has to be proven based upon what is it that the company can provide.
Ticker symbol. This is Bear and Cat. Ticker symbol TSM. 30 seconds. Go.
Essentially, let's see, supply chain shortages, water issues, climate change, those things can be huge issues that can hurt TSM's manufacturing process, alongside with customers wanting to leave TSM and going towards other players, like, for example, a Samsung, SMIC, along with potentially even looking at Intel if their process gets down to a certain point. That's the huge, biggest bear case for TSM, judged based upon can they hold customers and on top of that meet demand.
All right. 30 seconds. Bear case on ticker symbol AMD.
Bear case for AMD is a lot like NVIDIA. Valuation is, they say on a value side, 15% stretched over its actual fair market value. Also for AMD, can they actually produce enough? Can they actually stay competitive within not only the gaming space, but then also now that Intel is starting to drop its prices on server chips, can AMD still stay afloat as it pertains to performance above Intel and alongside continue to challenge NVIDIA along with locking the acquisition deal of Xilinx?
Time. Okay. Bear case plus a cat as in Catalyst. 30 seconds. Ticker symbol XPO. Go.
Essentially, transports start to slow down, and on top of that, we start to see that industrials start to take a hit. That's huge. If we start to see more stalling as it pertains to goods and service goods getting from one place to another, that can definitely hurt, because then essentially when you don't have high turnover as it pertains to trade and getting things from one side to the other, that definitely hurts because of the fact that they're judged within high turnover rate of goods shipping and also trade taking place. You know, you're like yelling directly in my ear.
It has to be done because you'll keep talking. All right. Ticker symbol. This is bear case. Ticker symbol STT. Go.
State Street. The acquisition that they did was Bay, but at the same token, that cost significant cash. Then on top of that, their merger with Invesco, that could be expensive. The biggest thing is, again, financials are become less attractive as we start to see interest rates drop. Or say, for example, if we go into a deflationary period, and on top of that, we start to see that investor flow starts to slow down when people start to go back to work. That can definitely hurt a company like State Street.
Ooh, smooth criminal. All right. Ticker symbol SNAP. Bear case. Go.
Snap losing ad dollars to some of the bigger players, to Facebook, Google, and also Amazon as well. The glasses, people think that that's more of a gimmick. And on top of that, it's like essentially, can they actually grow their users as it pertains to daily active users and monthly users? If those things do not grow, then that doesn't justify Snapchat's valuation at all, which ultimately means that you're bearish on the stock.
Woo! 1 second. Okay. Ticker symbol SDGR bear plus 1 cat go.
One bear case is the fact that essentially a lot of folks still don't understand what SDGR does. And on top of that, it takes, in order for them to prove their thesis, it takes time. So it's a slow creeper, kind of like a CRISPR Therapeutics, where the thesis has to play itself out and it has to be validated. And that's one of the biggest bear cases against SDGR. So which means that they burn a lot of cash and essentially the revenues just aren't there.
Woo. Smooth. Okay. Bear plus 1 cat for ticker symbol EAT go.
EAT, so they're known for like a lot of the Chili's restaurants and everything else. If people start going less and less and less to those types of chains and they start going into more of like the ghost kitchen economy, which I believe that that's where we're going, and if they're not making the adjustments, then that definitely produces a huge bear case, because if you don't have people in there with high turnover rate to pay for the food and to spend time at those chains, then there's no justification of the valuation, and ultimately the stock can go lower.
Boom. All right. Ticker symbol DKNG, 30 seconds bear.
DraftKings, essentially the stock is completely overvalued. On top of that, are the revenues going to be there, especially as we start to see other players within the gaming and betting space that arise? And on top of that, essentially it's like, if consumer spending is low, then why would they be betting? Because obviously if they don't have money to buy like their daily toiletries and everything else, then why would they go bet? I would say, honestly, in moving forward, look at any potential competitors that are coming down the pipeline.
Dang it, Mark.
Ha! You cut me off before the thing, actually.
No, I did not. No, I did not. The thing comes up late. That's why I said.
Y'all heard it.
All right. Trigger symbol HOOD, 30 seconds. Go.
Say that again. I'm sorry.
HOOD.
Robinhood. Okay, so Robinhood, essentially one of the biggest things that they have to look at is the SEC and the DOJ creeping within their woods. Also, the gamification. If gamification towards such a platform gets actually heavily scrutinized and where legislation actually takes place, that can be huge against Robinhood. Also, the fact that those young investors that started want to grow up and actually use more sophisticated platforms, then that means that Robinhood is no longer the case, along with if they start providing cryptocurrency on those other major platforms.
Time. All right. Ticker symbol LCID, 30 seconds on bear and 1 cat. Go.
Oh, Lucid Motors. I think the biggest bear case is that they started in 2007 and they're finally delivering a vehicle, but yet at the same token, they're a little day late and a dollar short and a little behind the curve. I think that they don't even know what space that they're in, though that they say that they're not competitors against Tesla, though that they're going after Daimler, those companies for the luxury space, and that's a very tough margin space. And the question is, can they keep up when those other players also provide products? I don't think so. Honestly, I think that the valuation is too high.
Ticker symbol TBT, 30 seconds, go.
As we start to see that interest rate yields climb, then that's good for TBT, but as interest rate yields drop, that's bad for TBT. So, I mean, it's more so a hedge play against your portfolio, but I mean, honestly, for the vast portion of the year, it pretty much just kind of sits there flat.
Boom. All right, the time is 6:30. We went through all of the picks, every single last one of them, with the exception of the ETFs.
Yeah.
And let the record reflect that that really is a testament to your years, time, brain power, research, all that. What is it? Is it 18 years now?
Yeah.
Yeah. So kudos, hats off. You did phenomenal. I know there was more you wanted to say and that you could have said, but I appreciate you sticking to the rules. And this was lightning, you know, and I thought you did a great job.
It was lightning. I was going through a lot. I felt like I was just like, okay, hey, pick it up and drop it. Pick it up and drop it.
You did great. So now that it's 6:31, is there anything that we should know for next week?
Just be on the lookout for any potential retests that could be happening, because of course, as much as we're seeing strong pulls to the upside, I mean, we could see some catalysts that can bring us to the downside just in the short term, temporary, before the bull market is fully reinstated. But for the most part, just stick to your thesis, stay the course, keep learning, keep researching, keep growing, and be kind. Oh, take what the market gives you. Don't try to force what the market isn't even looking for, or isn't even talking about. If the sentiment is there, don't try to create a sentiment that doesn't exist.
All right. That's time.
All right, y'all. Well, until next time, I'm Mark Monroe.
I'm jolyngc, in the place to be.
And hopefully this was a come up for you. We'll catch you guys next week. Peace, y'all.